In today's video, we will discuss about one more good performing small cap fund. Yes, I am talking about SBI small cap fund. Here, we will check its performance using real data. And by the end of the video, we shall be able to decide whether we should continue our investment in this fund or switch to any other fund. Hello everyone, I am Dhaval and welcome to my channel DIY Finance. If you find my video useful, do like and share the video and also subscribe to my channel. Your likes and shares provide a big motivation to make more videos like this. To start with, we all know that SBI Small Cap Fund is a good performing fund in its category, that is small cap category. Here, we will be taking into consideration data of direct plans only. Firstly, let's look at the basic details like AUM, that is total asset under management, which is around 11,800 crores, which is a little bit higher for a small cap fund. While the expense ratio is 0.76%, which again is on a higher side as compared to other schemes. The benchmark index, that is the reference against which the scheme is compared, is BSE Small Cap 250. Now let's look at the sector-wise allocation. From the table, it is very clear that the fund is heavily invested in consumer discretionaries and capital goods, followed by services, chemicals and metals. Quite a good performing small size companies form a part of this sector, and when compared to its benchmark, its allocation is a little different. But as lot of opportunities are available in small cap sector, this different allocation strategy should not affect the performance of the fund. Sheela Foam, Blue Star and V-Guard Industries are the main stock of consumer discretionaries, whereas LG Equipments is from the capital goods sector. Here also stock selection looks good. On checking the portfolio allocation, it is evident that the small cap shares form around 48% of the portfolio, whereas mid cap shares form other 52% of the portfolio, and there is no allocation to large cap stocks. With the above allocation, the fund is able to provide a good return with more volatility. The portfolio allocation is quite good for long-term investment for investors who don't mind taking little more risk. Mr. R. Srinivasan has been managing this fund since November 2013, and that too very efficiently, and hope that he continues in future also. Here, this long-standing association of the fund manager with the same scheme is quite positive and an advantage for the scheme. So now let's check the trailing returns and compare with its benchmark and category. On comparing the trailing returns for 3 months, 6 months, 1 year, 3 years, 5 years and 7 years, it is able to beat its benchmark and category with a good margin, and the fund has been consistent in outperformance for the entire period, which is quite good. Let's now see the rolling returns for 5 years, 3 years. Here, the fund is able to beat the index all the time, which is quite good. When comparing the rolling returns for a period of 1 year, it is around 50-50 as compared to its benchmark. Hence, can be concluded that the performance of the fund is good in a long run, but due to its asset allocation strategy, it tends to be volatile in a shorter period. On checking the calendar returns, it is quite evident that the fund has been outperforming its category and benchmark in most of the years and is quite consistent in its performance. Now let's also check the actual SIP returns for SIP amount of 1000 rupees monthly for a period of 8 years. Here, the total invested amount is 96,000, whereas the final value of SBI Small Cap Fund is 2,22,758, which is quite a decent return. And when compared to a 5-star rated Axis Small Cap Fund, which has also generated almost the same return. Now let's see how the fund performs on risk parameters. Here, we compare the parameters with benchmark index and category average. First, the mean return. That is the average return in a year, which is 25.29 and is more than the benchmark but less than the category average. Here, higher the value is better. Second, standard deviation. That is a tool to measure how much the return has deviated away from the mean return, which in this case is 23.77 and is less than both the benchmark index and the category average. Here, lower the value is better. Third, Sharpe ratio. That is a tool to measure the risk adjusted return, which is 0.92, which is more than the benchmark index and category average. Here, higher the value is better. Fourth, beta. that is the volatility of the scheme compared to the category, which is 0.76, which is less than the category average. Here, lower the value is better. Fifth one, alpha, that is a tool that measures how much better the fund has performed compared to the category. Here, it is 9.03, which is more than the category average. Here, higher the value is better. Hence, it can be concluded the fund is able to generate better returns than the benchmark with a lower volatility. Now let's see the upside and downside capture ratios. The upside capture ratio is the measure of how the fund performed relative to the index during the period when the index rose. Here, the value is 97, which indicates that the fund underperformed 3% more than the index during this rise period. Here, value of 100 and higher is desirable. The downside capture ratio is the measure of how the fund performed relative to the index during the period when the index has dropped. Here, the value is 74, which indicates that the fund declined 74% as compared to the index during this fall period. Here, lower the value is better. Now let's see the risk return graph. Here, on x-axis, we have standard deviation, whereas on y-axis, we have total returns. It is very evident from the graph that the fund has better total returns value with less standard deviation as compared to the category average and benchmark index, which indicates that the fund has been able to generate better returns with less volatility. So now coming to the conclusion, what should investors do? First, the existing investor should continue the investment as the fund's performance is quite good, but keep in mind that the performance is not the best in the category, but the performance is consistent. In my opinion, one should not switch to Axis Small Cap Fund as the returns of SBI Small Cap Fund is as comparable to that of Axis Small Cap Fund. Second, the new investors. They can start new investment as it's a good and a consistent performing fund, but keep in mind that the lump sum investment is not possible in this scheme, and there is also capping of rupees 25,000 per month in SIP mode of investment. I would like to add that I have SBI Small Cap Fund in my portfolio, and I am not planning to change the scheme till my next review. I will again try to review this fund after 6 to 7 months and check its performance. So stay tuned to my channel. Please subscribe to my channel if you have not done till now, and also press the like button. To check my older videos, click the attached cards. Thank you.